Welcome back to the Capital Crew, your go-to channel for the latest financial news and insights. Today, we have some eye-opening updates on the world of credit cards. From record high interest rates to concerns surrounding buy now, pay later programs, we've got you all covered in this video. So let's dive right in. First up, let's talk about the Federal Reserve and its recent move to raise interest rates to a staggering 22-year high. Chair Jerome Powell has left the door open for more hikes depending on the incoming data from the resilient U.S. economy. After a brief pause, policymakers have lifted borrowing costs yet again, making it the 11th time since March of 2022. The quarter percentage point increase was a unanimous decision, bringing the Fed's benchmark Federal Reserve rate from 5.25 to 5.5%, the highest level in 22 years. Now let's address some concerns for those using buy now, pay later services. Recent reports suggest that BNPL programs might be riskier than credit card financing in some cases. While they do offer easy access to purchases, some BNPL programs have hidden costs such as high late fees and long-term loan options with hefty interest rates. According to data from July 2023, a third of U.S. adults are currently using BNPL services, which is up from last year. Additionally, 45% of U.S. adults are either current or potential users of BNPL programs. However, convenience comes at a price, as BNPL users are more likely to accumulate credit card debt. As of July, 54% of buy now, pay later users reported having credit card debt compared to 35% of intenders and 38% of non-users. Turning our attention to MasterCard, the company has taken a bold step concerning legal marijuana purchases. Due to the federal ban on marijuana in the United States, customers in the 38 states where it's allowed have been forced to pay in cash. However, MasterCard has now demanded that financial payment companies stop accepting its debit card for such purchases. This move came after some shops were found to have accepted debit payments despite the federal ban. Advocates for legal cannabis are calling for new laws to make the sales process more convenient. Brace yourselves, credit card rewards enthusiasts. Legislation making its way through Capitol Hill could shake up the credit card rewards ecosystem. The proposed Credit Card Competition Act aims to reform the current system of processing credit card transactions. If enacted, it could open up the infrastructure to more payment processors, potentially reducing the fees currently collected by banks that issue cards. While this could benefit retailers and consumers, it might also reward programs less appealing for banks, potentially leading to changes or cutbacks. MasterCard is at it again, and this time launching a tool called Receivables Manager to streamline virtual card payments. With businesses turning to virtual cards to replace paper-based payments, Receivables Managers, developed in partnership with Billtrust, aims to make virtual card transaction processing more efficient, secure, and cost-effective. This tool will free suppliers from manually capturing and entering virtual card details, making reconciling digital payments a breeze. Great news for international travelers visiting China. Visa and MasterCard have now been linked to China's most popular mobile payment platforms. This allows travelers to book taxis, ride the subway, and make purchases at millions of outlets across the country using their Visa and MasterCard accounts. It's a significant step for Alipay and WeChat Pay as they continue to attract foreign investment and travelers to boost China's economy. We all love the convenience of mobile wallets, but did you know that more than a quarter of US consumers use more than one? Surprising, right? While most users stick with the same carrier, about 40% have switched carriers in the past year, and among them, 26% have started using a new mobile wallet while still using the previous one. Gen Z leads the pack, with 42% using multiple mobile wallets, while the trend tapers down among older generations. In a unique approach to tackle methamphetamine addiction, California is offering incentives in the form of gift cards to encourage users to stay sober. With an expanded pilot program launching in 24 countries, the state aims to target drug-addicted homelessness in major cities. Individuals participating in the program can earn low-denomination gift cards for staying on track with their treatment. Let's talk about something that affects nearly half of credit card users: late payment fees. Being late with a bill can not only cost you in fees, but also cause your credit score to plunge. This can lead to higher interest rates in the future, potentially costing you more money in the long run. Your payment history carries significant weight in calculating your credit score, so it's essential to stay on top of your credit card payments. And lastly, let's address a surprising statistic. Nearly half of US adults have at least one unused gift card, gift voucher, or store credit. That's right. The average value of these unused cards stands at $187 per person, totaling a whopping $23 billion nationwide. Due to concerns about inflation and recession, more people are now making an effort to use their gift cards wisely. And there you have it, guys, a comprehensive look at this week in credit card news. If you enjoyed this video and want to stay updated on all things finance, then do be sure to hit that like button and subscribe to Capital Crew. We'll see you next time with more exciting news and updates, and until then, stay financially informed.